Hello and welcome to your NAB Trade reporting season top 3. I'm Andrew Gagan. Qantas has announced an on-market share buyback of $150 million and a $300 million fully franked base dividend as it handed down its half-year results. Underlying profit before tax increased 5% to a record $1.5 billion amid high demand for travel both domestically and internationally. The airline's results have been helped by new planes and robust earnings from Jetstar. Net profit for the half year was flat at $925 million, as it saw a sharp increase in costs. Revenue for the half rose 6% to $12.9 billion amid high demand for travel in the domestic market. The airline will pay a 19.8 cents a share base dividend, fully franked. Qantas says it will make it easier to get status credits on the ground, but increase its threshold to retain status tiers for its frequent flyer program. Karoon Energy has posted a 50% decline in full-year underlying net profit to $107.5 million due to lower realised oil prices and less production at its Baúna offshore oil field in Brazil. Karoon is also forecasting that production at its Hudat facility will be at the lower end of its guidance range. Karoon will continue its share buyback program subject to market conditions and oil price volatility, with Chief Executive Carri Lockhart saying the board believes Karoon shares remain undervalued. A fully franked final dividend of 3.1 Aussie cents per share has been declared, taking the total full-year payment to 5.5 cents, equivalent to 25% of underlying NPAT. Here's Carri Lockhart.
Describe our results as being quite strong. We had sales revenue of $628.6 million for the year, and then that translated down all the way through our underlying net PAT of $107.5 million. When you take into account the soft oil prices, I think we actually did very well from an operational standpoint. We delivered basically on par with 2024 with our production, and that was a very tall order given that we had a lot going on with the transition and the acquisition of the Baúna assets in Brazil. So overall, we delivered very well.
Ramsay Health Care has booked a first half net profit of $160.7 million compared with a loss of almost $105 million a year earlier. Underlying earnings before interest and tax increased more than 7% to around $536.5 million, driven by a 7% increase in EBIT. Group revenue and other income rose to $9.4 billion, and the board declared a fully franked interim dividend of 42.5 cents a share, representing a 60% payout ratio. Management saying earnings momentum in Australia was expected to continue in the second half, while NHS budget constraints in the UK and ongoing funder pressures in Europe remain headwinds. And that is your NAB Trade reporting season top 3.